Hey traders, Nick here looking at some charts after hours. I thought I'd share one for the general public for Walmart. Just got done a few for the membership. This time it's for Walmart. So this is Wally World. They reported earnings and apparently things are not very happy there because the stock collapsed because the quarter was crappy. No, it wasn't. It wasn't crappy. Just the expectations were too high. It's more about upsetting people's expectations than actual report. I believe the quarter was fine. The forward guidance was also okay, but below what people expected. Maybe it's because it's been outperforming. So this is a daily chart on Walmart. That's pretty harsh. I don't remember it falling 11% on earnings before. So it's pretty harsh. So I had a few people ask me, if you don't know, I like to do credit spreads. So basically make money off of other people's money. If somebody wants to buy a put spread and I don't think they're going to win, I'll sell it to them. So basically, I would like to sell a losing lottery ticket for somebody who's super bearish or somebody who's super happy, super exuberant, and make money off of their bad bets. I don't take outrageous bets, so this was me trying to look for one in Walmart and I couldn't find it. So what does that mean? It means that the credit spread strategy is not very good for Walmart, especially not on a big drop like this one. The premiums are not hot, even on a down 12% day. That's pretty crazy. So in order for me to take the risk, the market would push me into a level where I'm not comfortable. I don't feel like I have an edge. So let's talk about the chart itself. Is this a time to panic out? I don't think so. This is where it was not too long ago. It had a big rally. How did it do relative to the SPY? Okay, so it outdid the SPY. It was rallying when the stock market was falling, and I thought it was strange. And I believe this was a high. Like, why was Walmart making all-time highs when the markets couldn't even find footing? Right? That didn't make sense logically. What did they know that we didn't? Was it the drone delivery thing? I don't know. I don't think so. At least I hope not. All right, so let's look into it. This was the base from not the pandemic. This was the Ukraine, the 224, the Ukraine flash crash. That was a pretty big, serious headline, scary. And this probably was Bullard here somewhere a month before that, and all the other tizzies that we've had. March 2021, pandemic is probably here somewhere. Yep. So you can see in relative terms, we've been here before, and it has been pivotal. What does that mean? If you look at it, the red line is where it is right now. So if you go back to 2020, when the world stopped working, literally, we stopped working, and then we recovered to pre-COVID levels, and then we went to crazy levels in April of 2020, and then this one backed up a little bit, and then the summer rally came and all hell broke loose, right? So this was the battle zone. April 2020, the summer rally breakout, the retest in March of 2021, several retests since then, and now this one. So this is a zone that is literally pivotal. The markets have pivoted around it since the pandemic. So it should matter. If not here. So what does that mean? If I own shares, I shouldn't panic now. It's too late. I missed it, 11%. It doesn't mean it doesn't go another 2 or 3%. It just means that the panic level is out. Does that mean I go all in? Hell no. If I'm forced to trade it, I would take a nibble. However I do it. If I buy shares, I only buy maybe 20% of what I want to own eventually. There is absolutely no reason to pile into Walmart. When the markets are not able to find footing. Okay, we had a big up day. Okay, we had a big up 2 days ago. Markets can still make lower lows as they can make higher highs. So we have too many question marks to go blindly all in anything. I'm not saying anything bad about Walmart. I'm saying the same thing about anything. If you go all in, you're pretty cocky. What the hell do you know that the rest of the world doesn't, right? Regardless of my conviction in Walmart, I have to know that the S&P is not going to be falling. All right, so, whoops. Okay. Nick is having a bit of a moment here. Okay, long day. Hey, it's like 6 p.m. here. I've been at my computer since, I don't know, 4 a.m. Let's see. Fundamentals, do we really need to look at them? Boring, but that's good. Although it's not very cheap anymore. 30 PE on this boring company. Look, it used to be 14, 15, and then 42, and then 20. So let's split that. It's on the high side, any which way you slice it. Price to sales, not that that matters. This is not a growth stock. Still on the high side. Watch me be a liar. Not a grow. It does grow, but single digits, right? So that's what I meant. It's a money machine. Look, 13 billion in net income. Let's see how much cash it creates from operations. 24. Well, I would have thought it would do more than that. 24, 25 billion in cash from operations. That's interesting. It did more than that in the pandemic. Very interesting. Anyway, there are no problems fundamentally. It's just boring. And people expected way too much from it. And they said, oh, wait a minute, that's Walmart. I thought it was GMT. No, I'm just kidding. I just made that up. Anyway, how do I trade it? Personally, I would rather sell puts to own shares, but it's not that hot. However, I would rather sell puts than own shares at this point. What does that mean? It means I get paid to own shares maybe lower. Not anybody should sell puts unless they are serious about owning the shares, because that creates problems. That's how people blow up accounts. Okay, so what did we learn? That Walmart is not crappy. The price action is bad because of crappy expectations. Hey, people, stop expecting the world out of a company that can't deliver it right now. They are the largest private employer, one above Amazon, barely, I think. So they can't move pretty quickly like Amazon, but they are consistent. So dips are a reason to buy. This has support, but it's a zone and it extends through 125-ish eyeball. What was that? 126. So I wouldn't panic out. I can nibble in. However I do it. Debit call spread. I wouldn't buy calls. The VIX is too high. Everything is expensive. I could buy shares, not all in, not nearly as all in as anybody would think you can be. Selling puts works. A combination of all of those. Panicking out here, I think, is a mistake. Trimming a little bit, maybe if I'm nervous, okay. Maybe buying a few cheap puts. Since it's too cheap to sell, it might be cheap enough to buy, to rent insurance to guard against another bad couple of days. All right, there might be some margin calls. I'm not sure if it's 2 days or 3 days. I heard they were going to make them 2 days, the settlement time. So look into that and see maybe there's some lingering selling effects, maybe a small bounce and then selling lower. All right, hopefully that helps.